Hello, everyone. It's a real pleasure to be here to welcome you all to the second day of the AFIFORUM. My name is Sophie Sirtaine. I'm the CEO of the Consultative group to assist the poor, CGAP, which of course some of you may be quite familiar with. CGAP is a global partnership that operates like a think tank. It is housed at the World Bank Group, and our mission is to empower poor people, especially women, to capture opportunities and build resilience through financial services. And we do that by developing action-oriented research that can be applied by our partners in the marketplace. I very much welcome this opportunity to talk to you today about the social elements of financial services and how we can build a financial system that works for low-income and currently underserved communities. What I'd like to do today is to put on your radar screen 4 key issues that are fundamental to achieve that objective and that will require our collective efforts. But before I do so, let me put this in context and talk first about how we at CGAP see the East and Southeast Asia region in terms of financial inclusion. And I think what really comes to mind is that it's a region of contrast with regard to financial inclusion. First, despite the region's remarkable growth and including a remarkable growth in registered accounts, including under the impulse of the pandemic, we see that Asia's unbanked population remains very high. Indeed, according to the World Bank's 2017 Global Findex Index, China has the world's largest unbanked population at 225 million, followed by India with 190 million, Pakistan with 100 million, and Indonesia with 95 million. Overall, nearly 40% of the 1.7 billion people without access to any financial products globally are in Asia. We also know that micro, small, and medium enterprises, which are a driving force in the region, have limited access to formal financial services. For instance, our data show that from 2010 to 2019, while these enterprises accounted for 97% of all enterprises and 69% of the national labor force in Asia, bank lending to these enterprises during the same period of time was just 15% of GDP and 17% of total bank lending. And we also know that informal workers, which are estimated to account for over 70% of the workforce of the region, are fundamentally underserved by financial services. So that's one of the story. But if you look on the other side, we can see that the region also has a very superior financial infrastructure compared to many other regions where we work in. Of course, this is itself a contrasted story. We have countries that have much more developed financial infrastructure than others, with China and Thailand maybe on the one hand of the spectrum, of course Singapore's as well, and then countries like Myanmar, which much poorer infrastructure. But in general, we see the region as having a conducive, enabling legal and regulatory environment, good financial infrastructure, strong institutions, and advanced knowledge, skills, and services over the financial sector. We also see a strong history of microfinance in many countries in the region, including Cambodia in recent years, and of course with the iconic unit d'essas of BRI in Indonesia. And we also see quite a lot of regulatory innovation in the region, with, for instance, the Philippines being one of the earliest adopters of more progressive regulation that permitted digital finance to emerge and e-money to be established. So that's the context, basically, a region with very solid foundations and yet enormous gaps. Now, if we look at the future, we can see that over the past decade, financial inclusion has increasingly been driven by new forces in the digital economy. And nowhere is this clearer than in East Asia. And we see that these trends are already having a very strong influence on financial and social inclusion. So what I'd like to do now is to focus on 3 main transformative trends that have the potential to radically transform financial inclusion and social inclusion in the region. The first of these trends is related to the legacy of the pandemic. while COVID obviously has been a drama for the world, it has allowed a very significant surge in account openings as governments throughout the region and in the rest of the world too sought to route payments to individuals and SME to keep them afloat. Globally, we know that nearly 500 million new social protection digital accounts were opened, including nearly 300 for women who have typically been most excluded from financial services. Now, this is potentially really transformative as these newly created accounts represent a promising gateway to financial services, but also to the digital economy and more. At the same time, we know that the gaps and disparities remain high and that this is not a done deal. Indeed, these accounts are not always fully functional. Some are limited accounts. In some cases, they're not used. Sometimes women are still excluded from using them. We have social norms that come in the way. And in any case, we also know that access to an account is not the same as financial inclusion and use. However, if we see that from the positive side, what these digital social programs and accounts have shown is that digital infrastructure is a critical ingredient for increasing a country's resilience to shock and reducing the impact of natural disasters and climate change on its citizens, including the poor, while at the same time opening up new economic empowerment opportunities for all. So this is a major development to leverage for the future. I think the second very important trend in Asia is the rise of digital platforms that are providing a source of livelihood for a growing number of workers and sellers, often in combination with other sources of income. Digital platforms centered on services like ride-hailing or e-commerce with payments are, just like the G2P accounts that I mentioned before, introducing masses of new users to digital payments and to the digital economy and digital services. And this is another sea change that can create very significant opportunities for social inclusion. For instance, we see women participating in greater numbers in the digital economy, and a forthcoming global research shows that platforms can indeed help women capture economic opportunities despite constraints on their mobility and limited access to professional networks in some countries. So these platforms allow, in fact, to go around prevailing social norms. We're also observing that platforms and e-commerce providers are pushing out from the cities to reach more customers in the rural-urban fringes, and some are even targeting rural areas. This is another very important development that is providing a possible new distribution channel through which digital services can be extended to rural areas, as is the case in Indonesia. And we are very pleased to see that Indonesia has included in its G20 presidency for 2022 digital financial inclusion. We're also observing that tech companies and platforms are expanding beyond their home markets. We see Chinese tech companies expanding in neighboring countries. We see non-Chinese players like the Singapore-Malaysian Grab and the Indonesian ride-hailing service Gojek moving forward. So this is all very good because it's increasing competition in the markets they served, but it's also expanding reach in other markets that are underserved. So again, this is a major change that is susceptible to provide financial, but also social and digital inclusion to many formerly excluded populations. I think the third trend that we see that is remarkable and potentially very important in terms of financial inclusion is the fact that increasingly countries, like Singapore is an example, are building new open API infrastructure to support open banking. And this, of course, can lead to very significant benefits in terms of opening services to previously excluded population. And in Asia, where you have a very strong level of existing infrastructure, financial infrastructure, but also strong trade relations in the region, we can imagine that the region could indeed leverage connected market solutions and become a demonstration case for what is possible when infrastructure is combined to enable new use cases. So we're very happy to see that happening in the region. Now, what does that all mean? All these developments for the future. We believe fundamentally that East and Southeast Asia will be the stage on which some of the unresolved questions for financial inclusion will be tackled, not just for the region, but globally. So fundamentally, we think that the region will help answer and show the way for the rest of the world on some of the most difficult and important questions remaining related to financial inclusion. And I want to highlight four where I think our collective action and efforts will be needed. The first one, which I think is the most fundamental, is the key question of what we can do to actively address the gender gap in financial inclusion. The gender gap in account ownership has remained unchanged, according to the Findex data, at 9 percentage points in developing countries over the past decade. We know that 2/3, not 50%, 2/3 of the unbanked are women. And we also know, on the other hand, that there are very large social and economic benefits when women get access to finance. In fact, women's financial inclusion has a multiplier effect that benefits women, their households and their communities, and ultimately their countries. I'll just give you one example from the region, which is that in Nepal, when women opened non-fee savings account, that led to increasing household spending on education, but also on nutrition. And that led to household keeping their daughters in school more. So very significant positive impact. Now, there's been progress in the region despite the remaining gaps. And for instance, if you look at the Findex data again in more details, you can see that India made significant progress in expanding financial inclusion through the Jandan accounts. And that would have led to a decrease in the gender gap in terms of account ownership by 6%, sorry. However, we still see that men are still more likely to use their account than women. And so we know that opening an account is not enough. We really know that we need women to use their accounts and to connect to the digital economy to really benefit from them. Now, the reason why this is not happening enough is because in many countries and communities, you have social norms that are constraining women's uptake and usage of financial services and to benefit from the benefits that they can derive from them. So to improve financial inclusion in the region, we really need to ask ourselves how we, the international community, but also financial services providers and policymakers, we can work towards alleviating such constraint. We will also need to pay close attention to rural women. Rural women are among the poorest in the world. They contribute enormously to food system. They're very much involved in agriculture, typically. They are most susceptible to the looming threat of climate change, and yet they are disproportionately poor and financially underserved. And so with the rise of digital solution and fintech, we really again need to ask ourselves how we can better design and leverage digital solution to increase rural women's income and resilience in a way that makes business sense. We also see very clear opportunity to push a gender lens investing approach in the region, which would intentionally integrate gender-based factors and through socially responsible investing would aim to address some of the systemic barriers women and girls face when addressing financial services. There are clear overlaps between gender lens investing and women's financial inclusion, such as, for instance, meeting the diverse needs of women entrepreneurs, strengthening sectors that predominantly employ women, and empowering women as consumers. So we think GLI funders can make a difference in the region, but again, they need to set themselves up for that success and they need to maximize their impact on women financial inclusion. So overall, this we believe remains an area that requires our collective intentional and systematic focus. We do not know exactly what kind of data we need, what kind of products will work where, what kind of distributions channel will be best suited in each context, or how we can go around gender norms. But we know digital financial services will be part of the answer. And we owe it to our populations to make real progress there soon. So I really would like to put that on your radar screen for an area of collective systematic attention. The second area that I'd like to highlight is the issue of the role of platforms for the well-being of gig workers themselves. Indeed, with the rise of platforms that I've mentioned before in the region, which provide access to previously unreachable customers, the question is whether financial inclusion and digital inclusion will follow as expected. So one question is how financial services can be responsibly embedded in the platform ecosystem. For instance, CGAP conducted primary research over 400 platform workers across 5 countries, including 2 in Asia, India and Indonesia, and across 5 different platform sectors. We noticed that women tend to look at platform work as a longer-term source of income than men, and that their expressed appetite for financial services align with that horizon. So what opportunities lie in potentially aligning the needs of these workers, of the platforms, and of financial services providers to get more social inclusion for these workers? In addition, we've noticed that some women are actually avoiding platforms, but are still using their entrepreneurial spirit to participate in the digital economy in other ways. For instance, our research in Pakistan, Myanmar, and Bangladesh finds that women with low incomes and who are financially excluded and therefore prevented from participating directly into online e-commerce that require to have a registered business or a formal financial account, we find that these women are turning to what we have called informal online commerce. This basically refers to the millions of women globally who start or expand their entrepreneurial journey through social media platforms to attract buyers, but then take payment offline. So again, what role can funders and financial services providers play to support these women to generate livelihoods through informal online commerce? I think more generally, the question is how fintech and digital financial services and all the innovations that are still to come, including central bank digital currencies, cryptocurrencies, and much more, how will all these developments live up to their claim to expand financial inclusion, and how will they improve by doing so the lives of low-income populations in Asia? I think this is another challenge that we need to put on our radar screen and work towards collectively. The third area is the question of how access to data by private tech businesses, including foreign companies, is being approached by Asian countries. We know that data is a foundational pillar of the development of digital financial services, and in particular, in their extension to poor people. And this is because, of course, they're unable to break the data asymmetry or simply the lack of data that has typically been a key obstacle to provide financial services to the poor. But of course, the question is, how can we ensure that the poor can capture the opportunities that data represents without harming them in the process? So there are relevant data privacy, data protection issues to take into account, but also while addressing the protectionism, fear, and national security concerns that could result in data localization measures and would come in the way of the digital financial services evolution to really serve the poor. The last area that I'd like to put on your radar screen for discussion during this forum is the question of how we can support the safe development of digital financial services and ensure the protection of underserved and low-income consumers, especially women. In our last research at CGAP, we have identified 66 familiar and new consumer risks and found that some of these risks are increasing so rapidly that they are outgrowing consumer adoption rates of digital services. The reach also revealed that the over-indebtedness of digital credit users, especially among mobile app users, is one of the main issues noted in many Asian countries, particularly in India, Indonesia, and China. It is driven by a combination of factors, which include unfair debt collection practices, such as social shaming, fraudulent or predatory digital lending apps, inadequate redress mechanisms, and undisclosed interest rates. So again, there is an enormous amount of work that needs to be done to ensure the safe development of digital financial services. It is even more important that our research shows that low-income women and rural populations are likely to be most exposed to digital financial services consumer risk because of their lower levels of financial literacy and digital skills. In fact, rural women are the most adversely impacted. So that links back to the first questions that I put on the table, which is how we can make sure that these specially excluded populations can be served in a safe manner. And so the question is really whether the regulators and the supervisors in the region have the right tools for monitoring in a timely manner and addressing in an effective manner the risks that are rapidly evolving and changing in the system. I will stop here. These are the questions and considerations that I hope we can collectively address as a community as we continue to contribute to financial inclusion and economic and social empowerment for the low-income and currently underserved communities in East and Southeast Asia, especially women. I hope this will help you as an interesting input in your conversation. Thank you very much for having me, and I look forward to the conversation that will follow in upcoming session. Thank you.